You want a treat, bud? Oh, chicken. Here you go, buddy. How's it going, guys? We're back in it. Did you guys enjoy your break? I did. I enjoyed mine. It was fun. While it lasted, we are getting hyped up. Just in 15 more minutes, we got not only Dr. Susanne Trimbath, PhD, coming on with atobitt to see exactly what they have to say, but we also have MVIS Earnings Call. And we are going to stay until, that's right, 2 p.m. 2 p.m. PST, says 5 p.m. Eastern, until the earnings call is over. But yeah, that's the plan for today. Hope you guys are excited to jump on in, answer a couple of questions. We had Mr. Jerome Powell earlier, and we looked at exactly what his financial system not threatened by frothy asset valuations was all about. So we could take a look at that as well. We also had IPOE. So 5 things to know about SoFi as it goes public. We can take a look at that. And finally, hold on a sec. We should take a look at everything we need to know about Tesla. So if you guys didn't have a chance to look at Tesla quite yet, here's where we're following the buy signal right here. A 3 out of 4 buy signal. Basically a 4 out of 4 at 675. So those of you who bought it at 670, well, that was a good dip, well, a sizable dip at least. Now we have that buy signal right here for, let me just get rid of that real quick. Hold on. I had hotkeys ready. How's everybody doing? Scissors in the chat if you guys are excited. Hotkeys. Webull. Tab. And then over on the face too. Tab. Oh, I'll do that later. Okay, now this should disappear. Yeah. Cool, right? Technology right there. I'm just waiting for a couple more people to show up because in about 12 minutes we are gonna see them. Oh yeah, for sure. Oh man, best moment ever. No, I agree. How's the 5G reception for you? Huh. Ocugen broke the hedgies. Yeah, time to see what is going on with Ocugen. We gotta take a look. Anyway, I'm curious about whether or not I should buy some Tesla based on this buy signal here. This buy signal was at 678. It's about $4 below, but that's on the 30-minute chart. So it makes me pretty confident. Let's look on the hourly to see if that same buy signal is there. Not so much, right? The 30-minute chart, I was talking to Warden during the break, and he was bullish on buying some Tesla, and ultimately he decided against it. But me, I'm a little bit more of a rambunctious rascal. I want to be able to take some risks. So if you guys saw that big early morning live stream, we had bought $1,500 more AMC and GME. GME looking like a better buy when we bought it around like 170-ish. I think, right around there. And AMC, I think I bought it a little bit higher, 1040. Still getting rejected by its EMA, now forming a double tight seal up at 1035. So the AMC is having some trouble. GME is also getting rejected by its 180. What's on the other side? What's in the box, Citadel? What's on the other side of 180? That's where we were rejected yesterday too. And today, same thing. We could not get to 180. So we'll check that options change just a second, of course. But first, let me take a look at Tesla. Yes, hello. 680 could have bought right here at this level of resistance. I even put this here a long time ago. What's up, L4G Custom Fabrication? Welcome to the Moon Platoon. I appreciate having you aboard. So before it gets to 690, it's crossing over the VWAP right now. I mean, it's pretty attractive. Here's what I'll do. I gotta put in my password. What is it again? 1, 2, 3, 4, 5, 6. Okay. So my average is all the way up at 738. No, that's too much Tesla. Maybe just 5 Teslas. I'll buy 3. Yeah, I'm not trying to go crazy here. There we go. All right, I'm averaging down on Tesla. One of these days is gonna be the right time to buy. Okay. Once again, I'm not a financial advisor. You should not be taking any financial advice from this show. It's just a fun way to be able to entertain yourself while the squeeze is underway. Okay, now let's look at the questions you guys have. Andrew, can you please explain the buy-sell signal program you're using, please? Darag, I got you. Inside the comment, inside the description of this video, you will see cheat code Algo and a tutorial. That's right. So after this AMA is over, come back and look at that tutorial because we're excited to show you that tutorial. Okay. Super Stonk Live, Dr. Susanne Trimbath. I'm excited. Let me see if I can make this a little bit wider. Mr. Worldwide. Okay, well that's coming up in about 8 minutes. Can we get MVIS on cheat code? Yeah, we can. This again is cheat code algorithm. And we had just someone else join, Abecedarian Camper. Welcome to the Special Infantry operations of the Mo Monkey Army. Thank you for joining the Moon Platoon. Okay, MVIS got a buy signal on the 30-minute chart, right? This is a 3 out of 4 disjointed buy. We have the squeeze, but no swing. That's okay. Overall, I think that Microvision is going to be gearing up for a pretty sweet ride. Pretty sweet ride. I sold Microvision at 18-ish. I'm starting to think that getting back in could be a good idea. So I am curious about it. Might get back in. Reversal just happened. Curious cheat codes thoughts. Let's see if there's a better reversal that we can see. I wouldn't say this is much of a reversal. 3 out of 4 buy signal here. 4 out of 4 buy signal on the 5-minute chart here at 1850, right? Still hovering around that 1850 right now. This is not much of a reversal in my opinion. What would be a nice reversal is if Microvision gains back all of its losses earlier today. And that earnings call, we're gonna get a little more context about exactly what to expect when the market closes. If you guys wanted to be able to trade when the market closes and get 2 free stocks on top of it, the best way to do that is with Webull. If you guys have not gotten your Webull yet, it's a good way to get it now. Okay, let me draw some crayon predictions here because we got 6 minutes. Okay, Epic Pen. Assigned to all desktops. Heck yeah. So pessimistically, let's take a look. Let's actually drag it all the way out until market close. We have AMC rejected once, twice, 3 times. 3 times and a half at 1035. That means, pessimistically, we're not going to be able to see past 1035 today because of this EMA. It continues to plague us. Maybe it actually will drop all the way back down, get rejected ultimately at the end of the day. On the other hand, what if we're a little bit optimistic? We're still not going to be able to pass the VWAP today. So that's AMC over there. Look at GME. GME, drag it out to the end of the day. So we did try to take 180. And this wave here is not complete. The 1, 2, 3 part here, but it is starting to taper off and lose momentum. So optimistically, I'm assuming that we're going to trade underneath this and eventually push above. Pessimistically, I don't see any other choice but to get rejected, but with a little bit of a happy ending at the end. All right. So we're looking at GameStop and AMC's pessimistic and optimistic patterns here. All right, in 5 minutes, y'all. Hugs in the chat for Andrew. Lord Weird. If only if it's 6 feet apart. 180 here. Mike Drew, yes, we're back. Heck yeah. Cody Becker says, thanks. Good to see how cheat code reads stuff since I'm new to looking to grab it. Most of my techno analysis from trading view from DT is on scalper side, so day trading. So they like to see how cheat codes view on everything. Cheat code is actually pretty good for specific stocks when it comes to day trading here. Okay. Can we check out ticker sign USA? I've never seen that before. Interesting. Julian Sheets. We'll do a quick USA check. Is this like United Airlines? Oh, it's Liberty All-Star Equity Fund. Disjointed buy signal here, followed up with more oversold price action, but still having a non-fluid narrative here on the 5-minute chart. Let's see on the hourly, not much of anything, just flat sideways trading. Consolidation after this gap down. And what was this? Dividends. After this dividends, people just started to hop out. Makes sense. Okay. I would say USA, don't expect too much out of it right now. It's not nearly a sell, but it's not quite a buy until we see a better entry point. Game Unlimited says, wait, you're saying other stocks go either up or down? Well, if Warren Buffett has anything to say about it, stocks only go up. Just put some coffee on my face. You want some? You can't have any coffee. Braden P, just for you. MTRX. Are you allowed to day trade on Webull? Yes, as long as you have a pattern trading account. MTRX, Loop Insights. For Loop, we're nearing on the hourly chart this overbought territory, but still no signal. And 30-minute chart says the same. Let's look at it for scalping. 5-minute chart, a buy, but a very weak buy signal. Loop looks like a future sell, but not quite yet. All right, let's put MVIS back there. And now let's get prepared. You guys excited? Heck yeah. Andy McMoney. Good, okay. You haven't missed the AMA. It's actually about to start in 1 minute. So you're in exactly the right time. Okay. Meatball, how you doing? You excited? Yeah, you better be. 1 minute now. Oh yeah, I am just very, very shy, so I can't speak too much when this interview gets started. But what I will say is that the deal was 80,000 subscribers for this morning's $3,000 AMC and GME purchase. So we're 14 subscribers away from 80,000. Just a PSA. 14 subscribers away and just 1 more minute away until this AMA gets started. I hope you guys are excited. Jack to the atobitt. Oh, yes. Get pumpy, we scallywags, arg. Yes, 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 get jacked, ye we scallywags. Oh, Cody, I did not hear about CMEG. Interesting. And DK says, you know what the FNMAK stock is? Has 300% short. FNMA has 10 different stocks. No, I don't. But I will look into it after this AMA. Remind me. Matt Perry says, bro, what? Everyone sub! 80,000! We did it! 80,003 subscribers! Woo! Woo! Let's drink to that. We'll pop out the Glen for this. Yeah, can we have some glasses?
Yeah.
Por favor. All right. Luckily, we have just 1 second before this AMA starts. 80,000 subscribers. Thank you guys. I really do appreciate that. We made it. Scissors in the chat. Rockets in the chat. Let's go.
Woo!
Oh, baby. All right. Cheers.
Cheers!
Meatball, you want some? Just kidding.
Oh.
Don't do drugs, kids.
I'll drink meatballs. Sure.
You want to drink meatballs first? Jim Cramer had picked AMC for his CNBC stock draft and it just jumped. Oh, CNBC. Okay, pushing past its VWAP, but still not quite over. My optimistic route is already starting to take some hits here. AMC is up from 1027 to 1053, so about 30 cents. Not much to bring home to. Good stuff. Like the stream for the algorithm, says Epic Sloth. Well, don't mind if you do. Yes, please. We have about 1,800 people here, 300 likes. Not quite mathematically sound, right? We're trying to do a mathematical proof here. Should be about 1,800 likes when there's 1,800 people in here. Should be. Go Speed 81, thank you for joining as a Mo Monkey Moon Platoon. Michael Whites, thank you so much for joining the Special Operations Infantry Group of the Moon Platoon. Y'all, thank you so much. Thanks, Meatball, your financial familiar, and your financial familiar, Andrew. I am Meatball's familiar, that's for sure. Well, we're 3 minutes late, which is okay. We're not trying to rush him. Oh, this video is unavailable. Well, I'll be back. Let me just figure out what's happening here. Dun 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 dee 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 dee. Video has been removed. Cool, cool. Did I buy my shares? Yes, Brohawks. Go check out. It even has timestamps. The last live stream before this one. Okay. What happened? I'm sure a lot of people are confused about what's going on here. Okay. I don't think I'm learning Portuguese. I think that was Spanish. Huh. Interesting. The stream just disappeared. Edit good to go. Okay, edit good to go. No, it's still not good to go. Hold on, give me a sec. I got you, I got you. Maybe they unlisted it. Yes, there we go.
Yeah, so
Did it.
all of my career has been in finance. I knew from an early age that I wanted to study money, basically, and how money works. So I've worked with insurance companies, Federal Reserve banks, stock exchanges, clearing, settlement. Was my career through the time that I went to grad school. 1994 is when I left the Depository Trust Company in New York. And did my PhD in economics at New York University, and then went to the Milken Institute where I did capital markets research for a couple of years before going out on my own. I've been doing independent research in finance and economics since 2003. 2003, yeah. So
Wow.
I do want to say that I've probably forgotten more than most people will ever know about back office operations, like all the post-trade stuff, centralized clearing and settlement. I also worked in Russia on a foreign aid project to help them build trade clearing and settlement systems when they shifted from communism to capitalism. My expertise is post-trade, not trading or trading operations. So post-trade is really my gig, and there are other people who can answer a lot of questions about, hedge funds, dark pools, trading strategies, that kind of thing. That's not really what I know most about. So, I took, an investment class in college, so I know enough about it. But really, everything that happens backstage at Wall Street, that's really where my expertise lies.
And that's what's so important and incredible about having you on here, because a lot of people are just trying to figure out, get a look inside the DTC. We've been talking and been posting about, hey, this stuff is going on, but having you here to actually help us explain that, and to really dive into kind of a follow-up of, I wrote this post about a week ago called The House of Cards, which you have generously spent time reviewing, as well as the Everything Short. And a lot of people want to know, just high level, how close were we? How closely related were we? Are we trying to shout the same message?
Yeah, so the House of Cards is a lot more of what I know. Everything Short, there's a lot of stuff in there that's really not in my wheelhouse. So I offered you some comments on that, but I don't think I can be as helpful there. On the House of Cards, I think there were some things that you caught on to about rule changes at DTC about not allowing issuers to say, I don't want to be in the depository. Most people have missed that, because that really came about as a result of one issuer telling their shareholders to pull their certificates out of the system. So rather than leaving their shares in street name with their broker, to get them registered in their own names. And it had been done on a small scale before, but for this issuer, a lot of people were organized, a lot of the investors were organized, and they really, pretty much everything came out,
Yes.
out of there. Yeah. And that was the point where DTC said issuers can't request this. Now, an individual can still ask to have their shares registered in their own name, right? So, GameStop has a direct registration, a direct stock purchase program, where you can, in fact, just buy your shares from them. I think the minimum purchase is $25 for a one-time buy. But so you can still do it. But finding that in the House of Cards really showed me that you've done a lot of background research, and had come up with some of the things that a lot of people missed. There were a few problems in there. The big one for me is, I think CD & Co. is a company.
Yes,
evidence, right? So CD & Co. Is what you call is a nominee name, and you should think trustee, custodian. So when anyone, and all of the banks and brokers have a nominee name that they use for securities registration. Any shares that are registered in a nominee name, that signals the issuer that these are not held for that company, that they're actually held for someone else, right? And bit of trivia, CD & Co., CEDE, that was actually C, the letter C, D, Central Depository. They started out as a department at the New York Stock Exchange, and when they needed to get a nominee name to hold securities for trade settlement, they used CD & Co.
Interesting. Thank you for clearing that up. Thank you for the compliment, and thank you for clearing that up. Yes, so that was a definitely a big thing. I was hearing a couple of people talk about maybe it was certificate depository, but kind of coming from gospel there. So I'm going to take you on you as the credible source on that. That's interesting. That's good to know.
Central, because that's where all of the New York Stock Exchange members could deposit shares there, certificates there, and they would hold it for them so they could use it for settlement. Because in the 60s, there was this paperwork crisis on Wall Street where there was simply could not get shares transferred, re-registered from one name to the next when you sold securities in time for 2-week settlement cycle. So imagine as you're trying to go to T+5, T+3, T+2, how difficult it became.
Yeah. I know you've drilled in a couple of really, really big points in your book about your personal opinion, your personal feedback on some T+10 settlements. But let's go ahead and get into. We've got a jam-packed hour here, folks. We are trying to cover big course level, big college course level stuff, and the entirety of her book is almost a 350 page book. We're trying to condense that down. So what I want us to start doing is, what we're trying to say here is that there are these shares that are just kind of floating around, being borrowed and being lent and lent again, and it creates this problem, as we'll get into, where there's just nobody knows exactly what is going on or who owns what. We just know that there are more shares out there than the company had originally issued. So I'd like to go through and kind of walk through a typical example for someone. We have to also keep in mind that there are a lot of people that don't understand the words or the terminology that we're throwing out, so we really want to drive that home. Let's take one example and talk about where in a perfect world, how would a short sale or a naked short sale be actually held in account and kept accountable? How would that go in a perfect world?
So in a perfect world, there would be no naked short sale, period. Like that's really an exception. That's, market makers. There are, in most underwriting agreements, there's a little clause that the issuer agrees that the underwriter and the remarketing agents can, in fact, that sometimes sell more shares than they actually have in order to keep the market flowing, right, to meet demand. Aside from that, in a perfect world, there would not be. In fact, if I were an issuer, I wouldn't agree to that. But in a typical short sell, the retail customer puts in an order to short sell the stock. The broker finds somewhere to borrow it so they can make delivery. They either pre-borrow or borrow at least within 2 days of executing the trade. And the borrowed shares are then delivered to the buyer, who then gets all the rights and entitlements to dividends and voting rights.
Yes, so
perfect world.
Yeah, so we're going to drill onto that too. So the rights are actually being transferred along with the share that's being borrowed, and that share may be borrowed multiple times, correct?
It can. It's not supposed to be, but it certainly can be. There's no. It's really because the buyer often doesn't know that they're getting a borrowed share. Right. There was a time in the 70s when, friends of mine with broker experience told me that they would not accept borrowed shares at settlement because of the chance that share was actually, they were borrowing a borrowed share. Right. So They would only say they would not be the buyer and basically wouldn't be the buyer in a short sale. And that required, of course, and this I think starts to get into in the not so perfect world.
Yeah, the perfect segue as you feel free. Yeah.
In the not so perfect world, the short seller, even one who borrows, may or may not mark the trade. Say mark the trade, that's old school. You used to have a piece of paper and you would write short on that piece of paper and say, I'm short selling 100 shares of something or other.
Are these the short sale indicators that we're seeing on FINRA reports, failure to mark a short sale indicator? Okay.
Yes, it used to be they actually wrote it on a piece of paper, but now it's all electronic, so there's something in there. So if the short seller knew that buyers would not accept borrowed shares, they might in fact just forget to mark it short, right? So that there's no record of a short sell anywhere, not at the exchange level, and certainly not. There's no indication to the buyer that they're going to be receiving borrowed shares. So that's just not marking the short sales.
Really quick there, so I can understand. So that is in essence a way for them to say, okay, the system wouldn't typically allow for someone to take a share that was marked as short or marked as borrowed, and by excluding that, it doesn't give the indicator that there's a difference between a long sale or a short sale. So it allows it to go through with the system.
Right, the buyer is the one who wouldn't allow it. So it's not that the system wouldn't allow a share to be sold.
But the buyer doesn't know the difference.
The buyer doesn't know the difference, but at the brokerage level, right, broker to broker, they know when they put that trade together, the short seller knows he's selling short. Right. And then if they don't turn on the indicator, that's where the rules violations come in, especially post reg show, right? In the 2004 period, that became a major issue because the number of shares circulating was so much greater than the short sales, right? So that's one problem that occurs. The other one is that you mark the sell short, and you pinky promise that you're gonna say you're gonna deliver the shares, but then you forgot to borrow them, didn't borrow them, thought you could get them, but then you couldn't get them, and maybe someone promised that they would lend them to you, and then at the last minute they go, oh no, I can't lend them. So that's another problem that occurs, right? That
Sure.
Even if you marked it short, you may or may not be able to get the borrowed shares to deliver.
So on that point, I think that's a great way to segue into, you spend a lot of time in your book talking about Patrick Byrne and overstock. I think it speaks volumes to, you were using words, I think you were being very generous in saying accidentally or may not have, left out something that we should have covered, but oh, sorry, we forgot. Would you go and give an overview of what happened with Patrick and overstock?
Yes, that's really interesting. Patrick was very active. He's this crusader and a self-declared crusader against naked short selling. So there's a group called the North American Securities Administrators. So every state has a securities administrator, someone who takes care of the rules inside their own organization. I'll find anyway, I'll probably get some dates wrong and some names wrong, but
that's fine.
So they had this whole thing was coming up, and companies and investors were complaining to their state at the state level because they weren't getting action from the SEC. They're complaining about, this naked short selling and stock loan and all that. So they called a panel discussion in Washington, D.C. at the end of 2005. And I was one of the people that was on the panel. And I knew in the audience that there were investors and CEOs of companies. I did not know Patrick at that time, but I knew that people like him were in the audience. I stunned them by presenting a report from the Securities Transfer Association that indicated that of the 285 proxy votes, proxy vote is the corporate annual meeting vote of the shareholders, that of 285 cases examined, all 285 had overvotes. Overvotes mean that they got more votes in than they had shares outstanding, right?
That's incredible.
Sometimes by large amounts, right?
Yeah.
100%. Now, just to be clear, the problem's a little better now. I think last year it was only 85% of the test cases had overvoting, but it's far from fixed. So they were really shocked, and I put out a challenge to all of the CEOs in the audience. I told them, I said, when you go back to your office, buy 10,000 shares of your own company, and at that time it was T+3. 3 days later, the broker's going to take the money out of your account, and he's going to say that you got your shares. Ask them if they really got the shares. Now, if you or I went to a broker and asked that question, they go, oh yes, I see it right here, it's in your account. Sure. But when you have the purchasing power of a corporate CEO, you have a tighter connection where they're going to really dig into it and make sure. And he took him, so finally, eventually, his broker, the firm, his broker at the firm,
yes,
told them that, in fact, they did not get the shares, and that multiple attempts to purchase the shares to replace what he didn't get had also failed, that there simply were no shares available to meet his purchase. Now, we're talking
$50 million worth of shares.
It's like his money, and they're happy to keep his money, but they knew that they didn't have the shares for him. It took him 2 months, and he's the CEO of the company of the stock that he's buying.
Exactly.
Shares.
That's pretty sketchy.
It's very sketchy. So he shared with me, and I redacted the name of his broker, but he shared with me and gave me permission to use that publicly, because I think it's a prime example of just how, like, as a retail investor, you're dealing with a retail broker, and that retail broker does not know backstage, right? They know what's on the records in front of them, and they don't know what's backstage. So that was a really, that got a lot of attention. And Bob Drummond from Bloomberg Magazine and Bloomberg Markets Magazine in 2005 did a multi-page article called the Proxy Voting Charade. all about stemming from his attendance at that meeting and being hit in the face with this idea that there are simply people are voting shares, right? They're voting in annual meetings. They're voting in matters of corporate governance, which are so important. And yet their votes are not counted because there's too many votes coming in.
Exactly. And we're actually dealing with that right now with GameStop. We are dealing with the proxy voting with GameStop. And kind of tying that back in there, we did have a volume chart. I know that a lot of people that have been following GameStop know this as well. You and I talked briefly about this before, but when we got into the peak here before the run up in January, we were having upwards of 180 million shares a day for GameStop being traded. 197 was the peak there, 197 million. We're talking about circulating the same stock 4 times.
And one day, their entire capital, so that number of shares outstanding, that's their capital statement, right? Mm-hmm. That's on their balance sheet. That's what they report to the Secretary of State in the state where they're incorporated about what their capitalization is like. Mm-hmm. And in one day, it's crazy, right?
It's incredible, and that kind of is a really good point. I know you just a couple of other points there on top of that. That wasn't the only lawsuit that we were talking about here as well. We had, so in addition to Patrick, we had in 2006 there were lawsuits filed against 11 prime brokers for allegedly doing the same exact thing, and they were conspiring to do this, basically according to your book. Let's talk about that.
Right, and that was the Electronic Trading Group, ETG, yes. Filed the lawsuit. I believe it was settled out of court. I don't think that there's any public information about the resolution. But and this
it's just another example.
It's a really important point, though, because we want to talk about 65 million shares that the company issued and, 180 or 210 million shares.
Almost 200 million.
Right? So this was ETG's complaint was that their financial model for shorting a particular stock included the fact that the shares were borrowed and would eventually have to close the short and replace them. Yes. And if the brokers were shorting the stock, their prime brokers, right, the guys that they're a fund, they're giving their orders, their trade orders to some group, and that group is not borrowing the shares to deliver, then that ruins their financial model.
Can you segue from this into the triumvirate of trouble? Because I feel like that's kind of what you're touching on here. So right. It's not just the naked short selling, but we have these other additional factors. You care to elaborate on that? Sure.
So the triumvirate of trouble. I've got. I used to do slideshows down in New York to try to explain this to people. And the triumvirate of trouble is shorts, bells, and loans. Shorts, naked or otherwise. Even a short that's covered by a borrowed share will in fact increase the number of shares in circulation. So while that share is out on loan, there are actually 2 people one person who really owns it and one person who kind of owns it, like they have a marker and then eventually the shares will be delivered back to them and they'll have their ownership, right? So even a short that's covered by a loan is a problem. And then when you throw in fails to deliver, which means that long or short, you just don't show up at settlement with shares. All of those add to this increase in that, what is the denominator? And I don't want to get too mathy on you, but sure, I notice some very highly educated and technical persons in your audience. So the denominator in the financial ratios is shares outstanding. 1/2 is bigger than 1/3. So as you increase that denominator, you decrease the values, right? Yeah. So it just throws all those financial ratios out the window.
Yeah. And then are there any, we know in your book, you do a good job of explaining this, but just high level, what are the incentives for these companies to fail to deliver instead of just covering their shorts like they're supposed to?
So that's kind of a trade type question, but I will say this, up until very recently, there was no penalty for failing to deliver. When we can talk about this some in more detail, but until very recently, the NSCC and others have started to put in penalties. There's a flat fee penalty. There's a per dollar value penalty. There's a VIG, like an interest that's charged per day not delivered, right? So they've started to put some of those in. And so there was a paper done in the early 2000s by a researcher at the SEC that talked about strategic fails to deliver. That in fact, it's a strategy whereby I take your money and I give you nothing. I pay a little fee to the, whoever I failed to deliver to. I give them a little cash, right? Yeah, fine, whatever it is. In the meantime, I have your money. So for 2 months, Patrick Burns' broker had use of his $10 million. I forget what the number was, but $10 million that they could invest overnight. They could buy other stocks. Right? So
yeah, they've got the money now. They're in control.
So to me, that's incentive enough. If there's no punishment other than a slap on the wrist, then no one's going to come out and break your kneecaps because you didn't pay back the shares. You didn't
exactly.
Right?
Yeah.
You just get this little fine, and for most of them, they're able to earn enough on your when they have your cash that it's worthwhile.
Wow. So you mentioned that DTC. I would want to kind of segue from there into the oversight and competence and the involvement section. So what did the DTC do when they would receive these complaints? So they would, can you kind of walk through how that management info system kept track of these issues?
Right. So I worked in troubleshooting at DTC, and troubleshooting, we dealt with all the operational, everything that didn't balance in operations. We send something to a transfer agent to have it re-registered in CD & Co's name from, Merrill Lynch or whatever. And, it's a month later and it hasn't come back yet. So that item appears on the list for the supervisors in the morning. There's a similar activity in the vault, for example. They get a break list. Every morning it says, this is what is on the shelf, and this is what we're supposed to have, right? This is what the system says is on the shelf. This is what we're supposed to have. Figure out why it's different. Settlement gets one that says, these shares were supposed to come in and they didn't. The only one that doesn't get that list is money, because on the money side, if you don't deliver your money by 4 o'clock, someone's on the phone calling you to get your money. So that's a whole different thing. We're just talking about those share size. So those lists, and I know from my work in troubleshooting, those lists are sorted by value, right? So we have an aged fails, aged transfers, whatever it is. They always come out by value, and you always hit the big value items first, right? So what in Storm Q2, and I talked about this as well, as the brokers continue to short, when they could short the stock, they do that. They continue selling more than buying to push the price down. As they push the price down, they can, in fact, keep dropping that item further down the list, the priority list for investigation at the DTCC, because now it has a lower value, right?
You're intentionally lowering and reducing the priority of the stock. Yeah. In order to
and I think this question came up, a related question came up in the AMA that I read. I can't remember who it was from, but could the company, like, what happens when the company goes out, right? So if the end game in naked shorting is that you deny the issuer access to capital by pushing down the stock price. So the way that they raise capital is they come out and issue new stock. So you're getting bigger and bigger shares of equity for less and less money, right?
Right, okay.
Right, so if your stock price is up, that's when you want to issue more equity, because you're getting, the issuer's going to get that
Which
capital.
GameStop is taking advantage of right now too. The market price is high. It's a good time to make some cash, right?
That's the time to do it, because if they need capital, if they want to raise capital, that's the way to do it. By pushing the stock price down, they are denying the issuer access to capital. If the capital is really important, I mean, if you don't have money to expand your business, buy new equipment, do capital purchases,
exactly.
Eventually they can drive the company out of business. Once they do that, then all of the fails, shorts, loans, everything is erased, because the stock is declared worthless.
Right.
Technically, it's declared worthless after, if you can't get a share transferred, re-registered from one name to another for 2 years, then DTC actually can declare the stock worthless, and at that point they just archive the records and shred the certificates. So at that point, and that was one of the questions that came up in the AMA, is that, and it's directly related to this, like there's so much damage done, not just to the investors, of course, the investors suffer.
I'd say 7,500 companies, about 7,500 companies or something have been put in a coffin because of stuff like this.
It's hard to say.
I just remember something similar to that in the book, and it's mind blowing that this is that systematic.
Yeah,
that's what I'm really trying to say.
There were companies that get started and fail and go out of business. I mean, that does happen. So they had to have a procedure to do this. But the idea of but it's just very official. It's like 2 years, can't make a transfer, you're worthless. The broker deletes your position. They shred the certificates, and then that's the end game. That's the end game for the asset grab in particular.
Mm. Yeah. I mean, it's just that story to me, especially about the having the option as in audit, and you're all about these internal controls where you're saying, where do you have this incentive? Where do you have the opportunity to maybe cheat the system? And that was just, man, that is a red flag. That is on top of some of these other points that you talked about. We can hit these real quick. In 2008, the banks that were the source of these failures to deliver began to see their own shares fail to deliver. And so to protect them, the SEC stepped in and stopped short sales against the securities, but just the securities of those banks.
Exactly. And that was the brothers went to Congress and said, help me, they're naked shorting my company now. But they're the perpetrators. And
it sounds too familiar. It sounds too familiar to what just happened with Robinhood and GameStop not too long ago.
Well, and then on the sort of the other side of that coin is that and I do need to mention this, in Europe and Asia, when they tried to stop naked short selling, they stopped it in all the stocks. It wasn't just the banks. In the U.S., they only protected the banks, which I think is, again, I mean, that's a really big red flag. Why were we protecting the banks when, in fact, the banks were the ones who were doing most of it?
And so when a lot of these SEC examiners would come over to the DTC, like people that are behind the scenes and outside of this, we have this impression that, like these people are being parented, mom and dad are making sure the kids aren't breaking the law. But when they would come and they would talk with you initially, generally the first question out of their mouth was what?
What does DTC do?
What does the DTC even do? And when you mentioned another point in here that said it's easier to pass a FINRA exam in order to become a broker or to be someone that was licensed to buy and sell stock, it's easier to get to pass that FINRA exam than it is to get your barber's license.
In most states, yeah, most
that
states
is just mind blowing.
On that, it's not that difficult to do. And a lot of times people will get hired and trained on the job while they're passing their Series 7 license. So it's not, look, they just have to know some fundamentals. That's why you have things like the certified financial analyst, right? CFAs,
yeah.
Right, because that's an additional designation beyond I understand the mechanics of stock trading. It's I understand something about financial analysis behind it.
And to that point, you were, I think you said like 73% of or 73% of the exam was basically them telling people which stocks to invest in, as opposed to just like what the process of this is. It was basically like advising almost in that FINRA exam.
That FINRA exam, there's, if you can Google that up, you can see some of the questions, you can see sample questions. It's pretty accessible.
Unreal. So to kind of group this in, so I feel like it's a good time to talk because people probably wonder why I'm not asking direct questions. So what we've done is we've taken a list of questions that were pertinent to this conversation, and I've gone through and grouped them into about 20 questions that were grouped on based like failed to deliver or regulation or compliance and oversight. And so as we have this conversation, I'm trickling those questions in, and then afterward when we post the the follow-up, which should be posted after this, we have mods on the back end of this actually taking live notes while we're writing. Those people will be able to see the questions and they will get the shout out there. But we had a lot of questions on this with the regulation. I think a lot of people don't know that these people are SROs, this self-regulatory organization, and they don't fall under the realm of Sarbanes-Oxley, they don't fall under the realm of Dodd-Frank and some other regulatory acts. So it's just overwhelming, the stuff that you put in your book to directly address this, not only like the triumvirate of trouble, but then how this is allowed to be pervasive, and the system actually allows these people to fail to deliver, which is something that we have to start, as you mentioned, raising the pitchforks about. This has to be brought out in that level of an audience.
Yeah, your pitchfork moment, bombard the man. You just got to find that point where you're going to say, okay, enough is enough. And I really need to stand up and do something. There was a question from, I just need to go back just a second.
This is your call. Go for it. Yeah, it's all you.
So, like, I don't really speak emoji, and I actually called you atobitt, right? It's a
You're not the first.
So I mispronounce your handle. Like, I'm sorry. So, Happy Sheeple 3 asked the question about, like, what can you do? And I got sort of a similar question from Rower, R-O-W-R, like, what can we do? And so I need to go back because it was nasaa.org, NASAA.org.
Oh, okay. Yeah.
Right? They put together that panel discussion in Washington where, I was
the Overstock case is what you're referring to here?
The Overstock, but also NYSE was there, and they had to admit, some of the things that they did on the proxy side. So the nasaa.org, they have a button right at the top of their homepage that says contact your state securities administrator, right? So they're the people who are most interested in the complaints that you have about, corporate governance and, what's happening to the companies in the state where you are, right? So I did want to mention that. And then on the voting itself, what do you do? Like you said, right now, GME is in proxy season. And there's a story about Overstock in the book as well about their proxy, what happened at their annual meeting when they got more votes in. And they knew for a fact that members of Patrick's family did not receive their proxies, so were unable to vote, right? There's a guy by the name of, there's a website called inspectors-of-election.com.
We'll link this stuff down below. Yeah.
And you can, the company, and the company has to do this, the investors don't do this, the company hires an inspector of elections, someone like Carl Hagberg, for example, who will actually go in and try to figure out, like, if in my view, and this is Carl Hagberg's view as well, and he's much more experienced on that side of the business than I am.
Okay.
If you're an issuer and you get more votes in than you have shares outstanding, you should not accept those election results. You need to stop.
It seems straightforward.
And get this thing straightened out. This will help to reveal evidence if there is naked shorting, if there are fails to deliver, whatever's going on, it can be revealed. Like, there are a few things that bubble up. There's a lot about fails to deliver and naked short selling that you will never find in public information, right? And even
intentionally, I'm arguing intentionally too.
Yes. Yeah. And even the issuers have a hard time finding out exactly what's going on with their own stock, right? This is a long-term problem. But there are a few things that bubble up, and one of them is during the annual meeting when it comes to voting. Now, after we raised this issue in 2005, there were Broadridge, who processes a lot of this electronically, offered a service to the brokers. They can pay so that if they report more shares to be voted than they have held at DTC, then Broadridge will tell them to fix it before they tell the issuer. And that's probably how we got 15% of the overvotes down, right? So we went from 100% of the test cases to only 85% of the test cases, because Broadridge will, so DTC says, of the million shares held by CD & Co., 100,000 are Goldman, 100,000 are Merrill, et cetera.
Right.
And then Broadridge goes to Goldman and says, you have 100,000 shares. who do we send the voting material to? And they send back 200,000 or 150,000 shares. Broadridge will tell them, I'm sorry, but you only have 100,000, you need to fix this. Well, that means that in Goldman's system, they had, and I don't know this is Goldman, I'm just picking on them because they're a big name. In their system somewhere, they actually had retail investors in their accounts, marked in their account, that they had more shares than actually existed.
GameStop is bouncing between 100 and 200% in the past couple of months. Institutional ownership.
Yeah, so that's a really important point, and the institutions are also really get up in arms about this. So the proxy voting charade, Bob Drummond, 2005, Bloomberg Markets Magazine, he's got a lot of details in there to help anybody who wants to understand that issue in more detail.
And you do a great job, too, of talking about all of this stuff in your book, which has, by the way, you have a huge demand for an Audible book right now, too. So I mean, we can talk a little bit more about that offline, but...
Well, I will say, I do want to let you know, I talked with the publisher, and he's in London, so he's in contact with the Royal National Institute for the Blind, and that's not an Audible, right? I mean, it's not an audiobook for commercial purposes, but we are trying to make it available for people who are sight impaired.
There you go. You heard it first. So got that in the works. That's incredible. That is excellent. Would you mind if we went ahead and transitioned? We're doing good on time. I think we're probably running maybe about 5 minutes behind, but let's go ahead and jump into looking at the evidence. So we're trying to lay out the groundwork of what's happened here. We've got these shares that have been rehypothecated to oblivion. We have the DTC that is not really doing a whole lot to kind of, or any sort of agency that's in charge of this. Looks like they're more incentivized to keep the problem going, and we're trying to blow the lid off of that. But looking at the evidence going forward, I'm going to be writing a lot of the stuff that we're talking about here in the House of Cards too. And so you mentioned a bunch of stuff in the book about some of these numbers that I'd like to go over just high level, and then we can kind of discuss what the implications of some of those might be. So right there up at the top, I've got more than a third of companies receive up to 25% more votes than they have shares outstanding. That's on page 55 of your book. That's that direct evidence of what we're talking about here. And now they really want to drill into the FTDs, because that's where we're getting to the money with this. Is the open positions due to NSCC, these are quotes from your book, 3.4 billion, let's just round it up there. Or round it out there. 3.4 billion open positions due to the NSCC. Open positions due by participants with the NSCC was 2.45 billion. That results in open total fails of 5.8 billion. I believe this was a 2005.
2000 and yeah, something like that.
2005 or 2007 or something. And from that, I pulled the same report. 2019 and 2020, 2020's total, and they've thrown this euphemism on there now. It is no longer fails. It is open positions with enrollees, or what does they say? They refer to these as open positions for which a trade guarantee is applied.
Right.
Okay. So
and the only time a trade guarantee applies is when there's a fail, because otherwise it's not. It's just due next week or next month.
Yeah.
Or something. Yeah. So
would you be surprised to know that your $5 billion figure in 2005, basically pre-financial crisis of 08, has turned into a $183 billion figure?
Right. Not really.
Okay.
But keep in mind, part of that is that there are more issues being traded in. There are, what should I say? Like there's more types of issues. So since 2005, 2006, NSCC has added, ETFs, mutual funds. They've got some bonds running through there. So there's more activity, more numbers, et cetera. That's certainly true. But that's why when you use those figures in House of Cards or everything short, I always encourage people to put a denominator on there.
Make that distinction, yes.
Right? So it's you know, it's a multiple of something, it's a fraction of something. So when I look at the 180
That's great advice. Thank you.
Open positions, I go back to I want to go look at the clearing fund. Because if in fact that $183 billion doesn't show up, it's the clearing fund that NSCC would draw on to cover that, right? So that's for me, that's the denominator. Like, is that a multiple or a fraction? In the 03, 04, 05, there were 40 times, like the fails were 40 times the clearing fund. So that if those fails really failed, there was no way to cover.
Game over. It's game over. And we're going to talk a little bit more, too, about some of these DTC proposals that have come out. I really want to pick your brain on those. But and that jump from 183 or to 183 billion was up 40 billion alone from 2019. And then to your point about the clearing funds, we're going to get into the kind of the nitty gritty here about the clearing funds. But another point you illustrated in your book was keeping the ratio or the volume of stock that's being traded on the NYSE, and then as a comparison showing, what's that figure here? We have a volume increase for a period between 99 and 2002 to 2003 to 2006. So 3 years to 3 years, volume of total trades increased by about 29%. For the same time frame and same comparison, a 95% jump in failure to deliver.
So I never met a number I didn't like. So let me be a little more mathy with you. So the thing was like, yes. So when reporters or whatever would go to DTCC and say, hey, why is the value of fails gone from 6 billion to 183 billion? We do more trades. Trade values are rising. But as a percentage of all transactions processed, is still a very small, less than a fraction of 1%. But what I'm looking at is what's that change across time. So if one is increasing much, so if trade volume is the deal, that's what's driving fails. There's just more trades, and so fails are going up. Then the trade volume, the change in trade volume should somehow parallel, should be correlated somehow. And as a numbers person, I look at that and I go, just not. Like, it's just not there.
It's not. To the point that you just brought up about that clearing fund, I mean, if people have been reading and following my posts, and your book talked about failures to deliver jumping like 1,000%, or not 1,000, but 100%. I also noticed these liabilities, these assets going up. Citadel was somebody hard not to ignore in my first post about Citadel has no close. I don't think that you actually reviewed that, but the point I'm trying to make is that asset side and in their short, or the liability side with their short positions, has jumped 100%. The assets are actually held by the DTC that are supposed to be used to cover those. And then also looking at the clearing fund balance from the NSCC, we have another 100% jump. So 2019, we had clearing fund balance of just under 4 billion, and the 2020 clearing fund balance is just under 13 billion. That was 2015 being just under 4, and then in 2020, so 5 years later, and there was a 119% jump in just 2019 to 2020 alone. So you talk about that amount that's being held to cover these shorts, and they say, well, we'll have less failures if we just have a bigger deposit account.
Well, there's a relationship between the two now, right? So in the leading up to the 2008 financial crisis, I made the points in several places that what we just talked about, the clearing fund was a fraction of the fails, right? That the risk in the system that was building up in the system was enormous. That there was, because that's, now they have too big to fail status, blah, blah, blah. Okay, so after that.
That's free card, right?
Right, so probably in, I've forgotten the year, like I said, so probably 2009, 2010, something like that. Prior to that, there was no calculation for the clearing fund that included fails. So it was based on activity. The more trades you did, the bigger your end of day settlement, the more you had to put into your fund. That's how the participants all put in different amounts based on what their activity is.
Right.
But the fails were not calculated in there until after financial crisis. And then finally, at that point, it was, that was included in there. So as the fails rise, now that clearing fund should be going up with it and coming down with it. I think it's still short. I don't think it's definitely not bigger than the fails. Let's put it that way. although it's not as far apart. But again, you have to look at this across time, like what are the changes? And then the one thing that really, as I read House of Cards and everything short, you're looking at notes to financial statements. That's where all the good stuff is, right?
Yeah.
That's where if you want information about those NSCC files, that's where it is.
One sentence can change your entire interpretation of what you just read in the previous page.
Right, exactly. And then the other thing is that DTCC and all of its subsidiaries are self-regulatory organizations, which means that they are regulated by the Securities and Exchange Commission. And therefore, all of their rule changes, price increases, everything that they do has to be submitted to the SEC, subject to public review, open for comment. I haven't worked at DTC since 1993. And the way I keep my knowledge updated is by watching their rule changes and watching, I look at their financial statements. They have continued to put less and less of what you really want in there. Yeah. And that reminds me of that old Paul Simon song, make a new plan, Stan. As soon as you shine a light on something that you see that's not right, the cockroaches run from the kitchen, right? Right. So you talk about rehypothecate, the problem is really resubmit, reprice, right? And each time a fail occurs, it gets resubmitted for the next day's settlement as opposed to being called out, right? Called out. And if it were called out, then you could start to really see those numbers come down.
Oh. Thank you for the insight on that. And I know we are getting a pretty close warning here. Still, we spend so much time. I appreciate all the time you've spent. I want to jump into the recent proposals with the DTC. We can spend just a couple of minutes covering this and kind of what your implications are. So the 003 filing is telling them instead of doing this monthly reconciliation, we are going to do this daily reconciliation to make sure that you're not getting too out of hand. Right. So give me some thoughts on that.
That's kind of a minor technical point because every participant receives a statement, their settlement statement. They get an early one and then they get a final one. They get a position report. I say report because, I'm old school. They used to actually print paper. Right. Right? Now they go online. There's a term like online. And they, in their, when they become members of DTC, they agree that they are responsible every day for letting DTC know or NSCC know if there's something off, right? If there's something that NSCC and DTC thinks is in their account or shows in their account is not what they think it should be, they have, and it used to be like 3 days to get back. So, but once a month, or once a quarter, they would have them actually physically sign the paper and send it in and say, yes, we really looked at it, right? But to say it went from quarterly to monthly to daily, it's sort of a technical correction because in fact they were always responsible for always to make sure that was right. Yeah.
Okay. And what about the 801 ruling saying, if we find out that your fund's not as up to date as it needs to be, we can require you to update that deposit within 1 hour?
Right. So I think that's and someone on the AMA asked the question about, is the Reddit making a difference? Is the GME followers, are you making a difference? I think that this is clear evidence that it is. So when you're really calling attention to a problem and then you start to see rule changes coming out from the DTCC and its subsidiaries, that's an indication that in fact you've had an impact. That they are starting to look at this and say, you know what, maybe we need to check this, this fails balance more often because once a month wasn't enough. We should do this every day because look, look at the GameStop, not only the dollar value but also the number of shares, right, exploded. So their risk can rapidly grow very quickly. The other thing is that one other thing I want to mention is CSDR. It's the Central Securities Depository Regulations that are going in Europe. If you looked at Euroclear.com, for example, just type, search for CSD regulation, you'll find all the information on this. This was supposed to go in 2019. No, 2019, then they delayed it to 2020, then the pandemic hit, it was 2021, now it's 2022. Okay, so it's pushed back. But what it basically is, you may not fail. If you fail, it's mandatory that the buyer can go into the market, get the shares, replace what you failed to deliver, and charge you the difference.
Which is what the rule removed was back in the day, where they removed that buy-in rule, that mandatory buy-in rule within the U.S., correct?
Well, it's always just been voluntary in the U.S.
Oh, good to know. Okay.
There were some circumstances where it's mandatory, but it's basically voluntary. But they're going to make it mandatory because if the buy-in fails, the depository will reverse the trade. That's putting pressure on all of the DTCC members in all categories, because if they have to comply in Europe, they pretty much have to comply here too.
Yeah, it gets hard to maintain two separate books there.
Right.
Okay.
So they're going to be watching this much more closely. There's so much more going on, and look, I'm just so grateful for the encouragement that I've received from the Super Stomp people. I mean, it's just been. It's what keeps me going when
I'm glad to hear you say that
about the outcomes, because the what can we do next is always hard, because it's very specific, and it's not just one thing that can be fixed that's going to create the brand new world. There are lots of things that need to be changed, and each time you call attention to one problem, the dark pools arise, right? So there's always the phantom
big picture is beautiful.
Tries to hide it away, right? So I would be, look, we can talk about doing another AMA.
I was actually I was gonna ask you. It's a really good transition in. I know we could kind of go through some solutions, but honestly, if we have some opportunity to do this again, look, I wanted to kind of wrap up my end of this by saying, I'm sorry that you never were able to get this to this level, but now we have 250,000 people that are starting to beg and demand answers, and that pitchfork army that you wanted so desperately is here. And my question to you is, would you be open to working, at your time and being able to, review different posts that I might be submitted to you? We can work on the House of Cards too, and really start to get this stuff ironed out and get the people the tools that they need in order to get this stuff pushed in and get this taken care of.
Yeah, and Spunky too has a way to send docs to me and point me to the DDs and the God level
due diligence. Yep.
Yeah, due diligence deep dive.
You'll learn.
I'm learning. Yes, I'm definitely beginning to read hieroglyphics. And I just just going on the site and finding things. It's a bit confusing for me, but anyway, yes, I'm happy to do that as time allows. And also, there's a lot of information in the Naked Short and Greedy. Thank you for mentioning that. But the other book, Lessons Not Learned, also
I have that too.
London.
I'm looking forward to reading that one.
So that one has that's for the techies, right? If you're a technical analyst, if you want to look at laws, rules, regs, the history of how many times have we, bailed out banks and brokers.
Yeah.
Right. So all of that's in there, but the Naked Short and Greedy is a narrative. So I wanted to write it and establish more storytelling. And so if you want to do that deeper dive, the other book would be helpful to people. But
I'm gonna keep you open. I'm gonna be in contact with you.
I'm happy to do that. Yeah. I'm happy.
And by the way, FYI, you've officially been dubbed the Jane Goodall of the Ape Troop now. So thank you very much for your. Someone
called me Queen Kong of the Apes.
Queen out there. Get used to it. You're gonna have a lot of names like that. So Dr. T, thank you again so much. I mean, wow, we just blew through that. There's a lot of info in an hour. I appreciate your time, and
that's why the book is so good.
That's what it was. So I appreciate you so much. Thank you very much, and thank you everyone for tuning in. Look forward to the follow-up coming out. Just shouldn't be too long, and we'll be in touch. Have a great day.
Thanks. You too.
Aw, okay. Well, that was the Jane Goodall of the Super Stonk Nation that, like Alan Sane says, I have been taking some pretty extensive notes, so I wish I could have jumped in, but they're just gonna fly by, and so any amount of conversation that I would have had would have just interrupted them. So let's break down what she just said. Too long, didn't read, but you really should give it a solid read with your ears. Alan Sands just said regulators aren't regulating, people are watching, and the people that are watching, you guys. That is what's happening right now. What a Queen Kong indeed. Right here, we're looking at the end of power hour, so the day is over. I was assuming that GameStop... Oh, that's not loud enough. There we go. I was assuming that GameStop and AMC were going to get a solid boost from that, getting as much publicity of her as possible, right? The Jane Goodall of the super stonk world, Queen Kong here. I want to be able to dive through exactly what she said, especially what she said about the DTC proposals. That's something that I want to be able to make sure that you guys are keeping attention, because that stuff, that's really exciting. We're also going to do some techno analysis of the AMC and GME world, as well as MVIS, because we're expecting that after hours, Microvision is going to just rip through the roof. All of this is based around the idea that these self-regulatory organizations, these SROs, are not regulating themselves. Seriously. Thank you for the mods. Thank you for a brand new mod jumping in here. My brain is escaping me, but Fuzzy G, thank you for joining. And I really do want to say scissors in this chat for the mods. Incredible work during the AMA. So I wish that Austin had an opportunity to, at the very least, jokingly ask her to say I like the stock, but still a fantastic conversation overall. First things first, naked shorts should not exist. So if you guys are here because you're either wondering, hey, after that market power hour, just the sluggish power hour, sour hour, less than 4 million of volume on GME, less than 40 million of volume on AMC, what exactly is the PhD Susanne Trimbath? Also, by the way, if you guys haven't seen her book, it's in the description down in the very first part of the description and in the pinned chat right in the live chat. So we have naked shorts shouldn't exist. This is already a question that we were answering when we had Pippa Malmgren, another doctor of the economics world, and when she came on, she also asked me specifically if I think that shorts shouldn't exist. My opinion was that naked shorts should not exist either. So I'm glad Jane Goodall and I have a very similar opinion. We also were talking about overvoting. So this is something that is essentially taking a vote similar to the proxy votes that you guys are likely either already done or planning to do, right? Make sure your vote is heard. Those votes are not getting counted, and what Austin covered yesterday, if you guys are still curious about exactly what that leak when Austin came on the show yesterday was to talk about, was basically having you in customer service limbo, but with the democratic system, right? You have a vote, you want to be able to make your voice heard, and they kind of cycle you to the back. And of course, we're going to post a link to that Austin interview from yesterday so that you guys can just look into there and just dig your teeth in, because he explains it for Apes. Also, Jezebel showing this to her daughter to check out women in finance. Yes, 100%. This is really important, being able to show exactly the silverbacks are not just dominated by the male, especially in tech and crypto and now financial systems. I think Jessa made a really good point here. Make sure to show impressionable people who might just one day become a financial gods of their own right. All right, to the triumvirate of trouble. I like that a lot. The 1, 2, 3 shorts, FTDs, and loans. So this is the third part of the data that you should really take home, right? We have shorts, which of it in itself, right? When I was asked by Pippa Malmgren whether or not I disagree with the very existence of shorts, I wanted to say, you know, they are a regulatory service, right? They are allowing you to attack a stock that isn't performing well, very much like the counterpart of supporting a stock that you think is going to work well. However, this is already just, since it's a negative force on a stock, on the very idea that the economy moves upward, this in essence is why it's number one in the triumvirate of trouble. The FT fails was her second part of the triumvirate of trouble. Fails in relation to the FTDs, right? Failure to delivers. In that sense, this is taking into consideration that the very first part of this triumvirate is shorts. And then if you naked short, you're going to have fails. And this cycling of fails is something that we're going to come back to in just a second. And then finally, loans, right? Shorts, FTDs, and loans. The very idea behind all three of these, margin calls, right? The mixed squeeze, coming back to it, because when you have people on the line taking out a loan of either shares or cash, you are then having a lot of trouble on your hands when these financial institutions also then get themselves involved in retirement plans, 401ks, and every single stock that you have known and loved. Those that's a tricky part to be able to build your entire economy around, US and the global economy. Let's see, strategic FTDs. I think that was an important point, because when she covered the fact that you take one piece of the triumvirate of trouble, the fail part, but then purposefully fail, you get to do this. And I think I can draw this out with a little bit of a diagram here. When she talked about, here, raise your hand if you understand exactly what she was talking about. What is strategic FTD? Exactly what is that? Should use a yellow color instead. Oh, let's see if let's see if some of my predictions were right. So strategic. By the way, this is what my notes look like in my notebook too, just like chicken scratch. So I'm amazed that I can actually read my own handwriting.
Someone said you look like Steve.
I look like Steve from the Blues Clues. Which one? The Filipino one?
No, there's one Steve.
The original one?
No. Yeah, you look like, because you're taking notes and...
Oh, taking notes in a book. Okay, I gotcha. Strategic FTDs, right? If I short you a stock I don't have, take it from the cloud, give it over to you, and then now you have a share of a stock that you actually don't, well, you do technically own, but I have the obligation to actually find that share for you, but I get your cash, well then that doesn't really matter, right? I can do whatever I want now with this cash. I can invest it in something brand new. I can invest it in a completely different stock and then counter your position in this asset, right? The only thing that strategic FTDs comes and enlightens in the big world of the stock market is that cash is king. If I can take your cash now, but promise you a share later, I'm printing money. So this is why these articles are up in arms about FTDs generally and naked shorting generally, is because who wouldn't want to be able to print counterfeit money? This is the exact same sanctioned wholesale, complete with government kickbacks, all the way into your financial system meltdown. And by the way, if you guys are wondering what's after this, after we break down what just happened, Microvision, what am I going to say? The Microvision revenue call, earnings call, is going to be at 5 p.m. Eastern, and it's coming up in just a second. So let's keep breaking down what we just heard. Next page. DTCC, she actually did work there, but hasn't since 1993. So this is an important point, right? Some people are like, oh, she actually is an insider. And since when have you been connected to a company you used to work for? 28 years ago? Yeah, so almost 3 decades ago she used to work there, and so she can understand it inside and out. If you guys were watching the exclusive interview with Austin about his House of Cards 2, hey, that was all about how the DTCC was originally built on the back of wanting positive change for the financial system, and now, yeah, like Tanya said, it's basically a Ponzi scheme at this rate. So we are looking at a well-respected author, PhD, authenticating a lot of the research that Austin has done and the premonitions, the assumptions about the market, the speculations that we have been asking for a while. Matt Weiler is asking QOD for my guy. Question of the day. Quote of the day. You will never be criticized by someone who is doing more than you. You will only be criticized by someone who is doing less. Weiler. Oh no. Let's see. More easy to pass a FINRA exam than barber license. I think that is maybe a quote from her book, but I'm just not sure where that's from, because that's a very pithy saying. It's easier to become a FINRA regulator than it is to cut someone's hair. And you can really imagine the haircuts necessary in financial systems. Yeah, you can really mess up the world of the financial systems that you work every day to make someone else rich. this is the this is how easy it is to become one of these self-regulating organizations, governing bodies here. Let's see. I talked about 100 to 200% ownership of the institutions of the float there. Let's see. Evidence. I started an evidence part of this notebook. Open positions where trade is guaranteed. I think I'm going to ask Austin more about this, because they were talking about where trade is guaranteed, and the only time that a trade is guaranteed, basically coerced buying, is when an FTD happens. That's interesting, because at the end of the day, you really do want to talk about coerced buying in two different ways. One is delta hedging, and even then, so the delta, as you have a options chain here, right? You have more and more options being bought on the way, and that allows you, let's say that this is $800 for GME's sake, right? It allows you to force a hedge fund to be able to continue buying more shares as your calls get to slide into the money slowly, like a snowball, larger and larger. That's one way to have guaranteed trades, because if you buy a contract and it's naked, that's going to be a guaranteed trade. So I think in that sense, I think I'm going to be actually to Dr. Trimbath, because that's another way. Coerced buying is two parts, right? Anytime there's a squeeze, there has to be coerced buying. So this is one of them. And then the one that she mentioned, FTDs, right? We have to be able to promise someone a share. And if it doesn't exist yet because you haven't borrowed it from anybody, you do have to go out and buy it. And what she mentioned about 801 is going to be coming out in just a second, of how FTDs relate to that. $6 billion to $108 billion worth of FTDs within a couple of years, 95% increase. So, well, 95% of the existing FTDs a few years after 2002 didn't exist back then. So that is just to tell you how bad the situation is. If you turn it around, that's like a 1,000% increase. From 6 to 108, yeah. This is roughly 20 times more, just in the course of a couple of years. So if you can relate that to the number of volume, which was only 29%, that mismatch is alarming, to say the least. So FTDs is really the theme of the game here. If you guys are looking for a quick breakdown of what we just covered, FTDs are taking the entire world of the economy that you know, global economy, not just the US one, by a very shadowy form, basically a shadow of what the economy should look like, and that doesn't hold water. It doesn't hold weight, doesn't hold water, and that's the dangerous part. Okay, the best time to wear striped sweaters all the time, says SpongeBob. Fair enough. She talked about how rehypothecation, that's an important step. They didn't really talk about rehypothecation because she wanted to bring more attention to resubmitting and repricing of FTDs, right? We've talked about cycling out FTDs in deep the money calls. We have basically talked about how you can take a strategic FTD, fail to deliver a share on purpose, just to make sure that you have their money in advance, the counterfeit money that you just printed, and then turn it around, resubmit it, reprice it, right? This system allows you and rewards you for printing your own money. And then finally, the DTC proposals. Really important to be able to note that in terms of 003, I've already said that in the previous times we covered the 003, that it is just changing a rule from monthly to daily, but the daily rule already existed. So in her eyes, she said that this is a technical correction, right? So in that sense, maybe this is the first, like, honestly, this makes me even more bullish. This makes me more jacked, because I didn't want her to agree with everything we had to offer, right? I didn't want her to be like, yep, this is all true, because then I would be sus. I'd be like, why is this respected author, PhD, coming and agreeing with every single speculation that we have? No, I'm glad that she pushed back on the 003. And then on 801, she mentioned the CSDR, and I couldn't write down the entire acronym fast enough, but this regulatory body says you may not fail. Buyer can bill you the difference. Essentially, if I promise you a wonderful wedding for your daughter, right, and you don't show up, or I don't have a wedding ready, you can just pay for whatever wedding you want at market value, and then bill me the difference. I think that would solve the entire issue here. Buy-ins should be able to control the system. If I bought your share and it turns out you naked shorted the share, I should be able to buy a share at market value and then charge you because you sold it to me. That would just solve the entire system. That's just how normal economies work of other products, if you think about it. So I'm glad that she covered that. The U.S. regulatory body is not playing the game compared to the rest of the world. And then she said something, at the end of the day, dark pools arise. I kind of wish she talked more about off-exchange and dark pools in the OTC market, but that seems like a fun little trailer for next time. So that is the breakdown of where we are at. This was one of the best AMAs I've had the honor of sitting through. Thank you, Austin. Thank you, Dr. Susanne Trimbath. Thank you to all the mods of Superstock for making this happen. And I am glad that they even hinted at the next step. I'm glad that they talked about how there should be a second one incoming. And so if you guys are curious about the rehypothecation part 2, if you guys are curious about the House of Cards part 2, that's exciting. I'm going to say nice job. Nice job, brother. Just finished rehashing all of the notes I took. She was so cool. She was so cool. I wish one day I could be that cool. Just coming in, answering the questions, like being, and then saying, I think when she was talking about users, she was like, wake up sheeple, username wakeupsheeple.69. I don't know. I thought that was very strange because I was like, huh, she just said a username. I guess she's perfectly fine to say it, but I didn't expect to have that come out of her mouth. Okay, very cool. Oh man, so I have questions from you guys, so I'm gonna go scroll on through to see if you guys still have questions. I'm gonna stop recording because that's gonna be like a 3 GB file. All right. I'm sure a lot of that was not digestible to the extent that we would want it to be digestible, right? I'm sure that a lot of that needed you to have at least some knowledge of either Austin's DD, and then to understand Austin's DD, you have to dig into his research and actually have a little bit of an accounting background just to understand exactly how these debts, loans, shorts, and then fails actually coalesce and link to each other. And in that sense, I think that ultimately, even though Austin said, you know, it's true, we have 250,000, 500,000. When you get to a full million people that are interested in actually real financial change, you can bet that the same proportion of people who don't know what's going on is going to stay pretty much the same in the macro sense, right? If not increase dramatically as a proportion of the population. Because the more people that are interested in this, the more people are going to be misconstruing the actual results of the results of the research here. So hopefully I was able to dive into a little bit of my notes, make it a little more simple. And I was just excited to be able to jump in and make a too long didn't read about it. So let me just take a look now. Okay. Tell him that he's so handsome. Joseph M wants me to tell Austin that he's so handsome. You know what? Actually, I might. I'm just gonna copy Joseph's message here. Also, you're handsome. It is needlessly complicated. No, that's true. Okay, now we have a little bit of price action for AMC and GME as well as Microvision. Let's actually take a look at MVIS first. Remember, we are waiting until we are going to listen to the Microvision call together. I'm just going to switch this up real quick. Microvision earnings call. Run and hide, hedgies. Okay, so Microvision earnings call here is going to be in about 40 minutes. I'm going to look at how Microvision has been performing. Oh, already a pretty fat dip in the after hours here, all the way down to 18. So now 18. Oh, sorry, wait. All the way down to 16.75. I still have 5 shares here at $11. I could have sold at 30 something and made 200% my entry point. So I entered around here, I think. Yeah, right around here on the 21st. MVIS ripped all the way up to $30. What's the high here? Excuse me. I think it was like 31 and change. And then it plummeted earlier today. Could not rise above 1910, this level of resistance here. And now is dipping all the way down to 1637, this level of support here. Is already bounced off of 16. Let's go back to the minute chart. Is already bounced off of 16 as of a couple minutes ago. Seems like that earnings miss is actually taking and making Microvision a little bit upset. GameStop, on the other hand, I bought around here. So because of 80,000 subscribers, thank you, by the way, those of you who have hit that subscribe button. We got up to 80,000 today. I paid the GME and AMC for 140 more AMC shares and 9 more GME shares ahead of time. And now we had GME once again topping at 180. Yesterday it topped at 180, could not get past this 180 wall. We know about spoofing and layering and how hedge funds can use high frequency trading to be able to spoof the top of a $180 sell wall, and so that sell wall could have been keeping GME underneath 180. Remember, let's look at the Stonko tracker again. That we have another 15,000. You guys see that? 15,000 more calls at $200. We took a look at the options chain as well. So I use Stonko tracker to check out the number of options expiring each week, and I use option Sonar to take a look at how many options were added today. Now that is pretty poetic right here. Usually we see some battlegrounds with puts and calls battling it out, some deep in the money puts, some deep in the money calls. However, right here, right around where the GME's price action is, all calls towards the right, so this gamma ramp upward, and all puts to the left, this gamma ramp downward. Okay, so basically almost nobody today bought any in the money puts or calls. Frankly speaking, forget about McDreamy. Andrew is McSqueezy. I agree. McSqueezy. Okay. Is that a chicken bone in my hand? No, this is a pen. This is what I've been using to write.
You want chicken now?
I do want chicken now. King831, thank you so much. You contributed to it. This is your victory as much as mine. Okay. I don't know why people are ragging on Uncle B today. I personally don't know much about what Uncle B is doing. Did Elon give me a quote on hold on a second. Did Elon give me a quote yet on our ship to the moon? He did. I'm gonna have to re-bargain with him because it's a little steep. It was like 40 moon credits and then a Mars buck. I still think that Elon Gate is like Watergate but for Elon Musk. Somebody prove me wrong. Okay, Microvision coming out in about 35 minutes. Got MVIS on the low.
Good for your work meetings.
Yes.
Your chopstick.
No. How low does Mavis? How low can Mavis go? Chopsticks, thank you. Well, Mavis is already bouncing off of 1637, so if this was the opportunity for you to jump in, that was it. Let's take a look at the 5-minute chart for Mavis here. Okay, wait, hold on. 30 minutes first. Earnings call, come out, estimate negative 0.03. That's still the same. So there's usually estimate and actual, so there's no actual coming out yet. There was no sell signal for this pretty egregious drop here, about $18 all the way down to 16. No sell signal on the 5-minute chart. Ah, there it is. Sell signal, tab, on the 1-minute chart. So on the 1-minute chart, we had a sell 2 minutes after hours started. This was a 2 out of 4 sell signal, pushing way past its Bollinger Band buy signal here. So I'm going to keep Mavis on the minute chart because likely a lot of people are going to be scalping it when the earnings call actually starts. Thank you, JC, for the data. AMC 40002. Cool. I don't understand why AMC doesn't transition to a streaming channel. It's not a bad idea, actually. All right, guys, 34 minutes until that Microvision earnings call, which means we have plenty of time to chill and ask any questions about that AMA or about what kind of ticker symbols you guys wanted to see after hours, right? One of you said that not enough streamers go long after hours, so today's your day. Mavis. Hey, what's up, Meatball?
He wants your chicken.
Yeah, I didn't see you. Where were you during the AMA? Huh?
Here's the assistant. He knows you're taking notes.
I see how this is. Oh, Ryan Cohen's tweet from 2 hours ago? Mr. Ryder says, I have no whiskey left. You send me a care package? Thanks, my friend. Mr. Ryder, you got it. Let's talk more in the mod channel. Okay, Ryan Cohen. Thank you.
Let's put it under your tray. Yeah.
Okay, Ryan Cohen. Uh-oh, it's Mr. You know who this is? Mr. Nappy? Right?
That's, no, that's Mr.
Mr. Hanky, that's right.
Mr. Knack.
Mr. Napkin?
Mr. Napkin?
This is Mr. Napkin. Oh, Renhall wants to look at TCAT. Heck yeah. Mr. Hanky. So this is a tweet from Ryan Cohen. What do you think this means?
Gonna bring all the Christmas presents to the little boys.
He's gonna bring all the Christmas presents to little boys and girls.
And
That's
put some poop on them.
exactly. That's what I'm thinking too. On the minute chart, TCAT is terribly overbought. 5-minute, same thing, except there's no sell signals this time. So there's no sell signals on the 5-minute chart, which means that macro scale, there is no bearish momentum for TCAT quite yet. So there's no bearish reversal yet, especially as soon as you leave the 5-minute chart, you can immediately start to see that pattern. So I would say that for TCAT, I mean, you're playing with fire right now, but according to cheat code, you're still good for a while. So I would keep a very close eye on it. If you want to keep your own eye on it instead of asking in the live stream, go ahead and grab cheat code in the description down below to be able to use it for yourself. Microvision closed exactly at 18, huh? Jezebel needs libations as well. Mighty Brows. Oh yeah, mods. Let's get a conversation going. It's time for Mr. Hanky to bring some holiday cheer. Uh-oh, it means Christmas comes early. Poop Christmas comes early. He's telling us we're going to poop our pants when the squeeze finally happens. Okay. You think that's what's happening there? $30. The last time I refreshed a earnings call, it was a GME one and I got kicked out, and that scared the cack out of me.
The what?
The cacka.
Oh, I thought you meant
the South Crackalacken.
I was gonna say a different word, but like.
No. Mr. Henke, the Christmas poo. He loves me, he loves you.
Mr. Hanky's about to hit the fan.
Oh.
That's funny. I was thinking that's what it is, but...
Andy K says, enjoy your holiday, sir. You deserve it. We'll be here. I'll be here too. I will be streaming over my holiday. Michael is asking a question about CTRM. Sure, we can look at that in just a second. Fuzzy says, I believe it references that we all need to work together as a team and not work against each other. It's a good episode. I like that. That's much better. Oscar says that he retweeted it to me. Let me see. Andrew says Jason Tantio, Mr. Stream today. Long day at the office. Can you take a look at FAMI? Bought it at 30 cents. Thanks, appreciate all you do. And Michael Riley, thank you for the super as well. FAMI. Farmy. A lot of people ask about FAMI recently. Whoop. On the hourly, dropped far out of a gap down, 78 cents all the way down to 32. So that's why on the hourly, people are wondering when to jump back in. But so far today, FAMI has just been hovering around 34 cents, grossly oversold right now, because its Bollinger Cloud is all the way back here at 57 cents, and the top of which that's 73 cents. So if you're expecting a resurgence, this might be a good stock to be able to double your money in a couple of days. However, I'm wondering why we don't have a more compelling buy signal here, because this is all disjointed. Disjointed squeeze indicator here, buy indicator here, swing indicator, and none of them are actually predicting positive price movement. Let's take a look here. Down 54% on the day. And that was from all price action done during the after hours here. So cheat code is at a loss for when is the best time to buy, but there has been buy signals just thrown around nonstop. So I'm imagining that this is an outlier. That's good feedback. Thanks, God himself. Why Farmy shares are trading lower today? I mean, it's trading. I mean, how much more low can you go than like almost 50%? Farmy are trading lower after the company priced its 140 million common stock offering 30 cents per share. Wait, it priced itself. Okay. It's an agricultural company. Farmy prices upsized offering to 30 cents each, expects 42 million gross proceeds. So they've priced it at 30 cents each. And so it's currently at 35. Well, in that sense, I mean, I guess history will be the judge of it, but as of right now, the VWAP is actually trending underneath the price movement. So some people are a little bit too optimistic about FAMI. I would say that right now, we'll check back in with cheat code soon, but I don't see that this is a positive outlook for FAMI in the near future. Give my boy Meatball a treat. Hashtag Meatball Mafia.
Yeah, but I was like, give my meat a treat.
Give my meat boy.
Meat boy.
Foment, that reminds me of Mr. Kramer. The name is Farm Me. That's fair. Reminds me of Rocket, like the Rocket Mortgage. That was just a little bit too on the nose there. Please log in a few minutes before the start of the event for Microvision. I'm waiting. Can't stop talking about Marcus. Why does YouTube let me stay when I break all the rules? I agree. Why? I'm sure his channel has received so many flags. I like the username Microsoft a lot. A lot. I like your username a lot. Obedient Meatball with food around. Yes. He's very obedient. He's very hungry. Guys, what is HODL? Is it the same as hold? Yes. Correct. Are we done the Microvision earnings yet? Yeah, we're still waiting. It's going to be in about 20 minutes. Hope you guys are excited. Here come the chewing. Excuse me. I'm gonna chew further away from the microphone. Farmy always goes up during the holidays. Chinese holidays. They're mushroom sellers. Ah. Hold on a second. Oh yeah, I liked God himself's constructive criticism. Mr. Ryder says HODL stands for HODL or Die Lonely. RMTI. Sure, we can take a look in a second, as well as HOFV. Silvio Heinrich. I've never heard of that before. Although I have heard of that meme, but I haven't heard about what that is. Is that a crypto or an ETF? Ivy Emoisili says, I'm going to keep asking, do hedgies have to buy shares on FTDs or just pay fines? FTDs is a short that does not have anybody that it's borrowing from. So, FTD is an occurrence when you fail to find somebody. Aw, Mighty Brows, you're already a mod. Best stonk planet. Sorry, best stonk community on the planet.
Best stonk planet in the community.
Best stonk planet in the universe. Thank you,
Period.
Mighty Brows. So yes, FTDs, they do have to buy the stock. Please register. Okay, here I go. Whoop. Andrew Mo. AndrewMoBusiness@gmail.com. I'm the CEO of my company. No, thank you. Okay, so they're having some fun hold music, but now we have the Microvision first quarter in 2021 financial and operating results call. So we're just waiting around until they start. But we still got questions if you guys have them. Someone just asked about HOFV. Let's go Raptors. Raptor token. Raptor. Oscar Perez, you might have to hop on your laptop indeed. Okay, HOFV. Hall of Fame Resort. On the 30-minute chart, there was a soft buy signal here that would have panned out eventually. 438 would have gone up to 464. Right now, there doesn't seem like a lot of opportunities to actually rip on this stock. The last successful 444 buy was all the way back here. So this was a little bit disjointed, but you guys can see that you have one signal, two signals, 3, 4 right here at 288. And that wouldn't have paid off for a couple of days, but it would have gone to a 4 out of 4 sell signal at 384. So from 288, it's a whole dollar. It's about a 30-40% rip. As of right now, HOFV does not seem like it is showing any clear indicators here. It shows a positive swing indicator, however, it's getting real close to their overbought territory. So I wouldn't touch HOFV right now. But can't give you financial advice, you guys decide. Okay. Microvision 2021 financial and operating results call. 17 minutes. All right, guys, 15 minutes left. Oh. What I'm going to do is I'm going to wash my hands real quick, and I'll be back in a sec. What did you say?
My arm is so brown.
Okay. Responding to Dr. Trimbath's comments about how pervasive FTDs are, you realize that brokers are quite literally taking your money and giving you nothing. You mean what? What? What do you mean? Do you mean PFOF, like payment for order flow, or do you mean how brokers or contract for differencing, right? Because all of that is like ways to play the stock market that doesn't actually allow you to be an active participant. But it's not like the broker is taking your money and not giving you anything back. Green Gum Drops says, hey, quick question. How much wood could a woodchuck chuck if a woodchuck used in Husqvarna 9-pound 2.4 HP gas chainsaw? Thanks. Look at Twitter stock. Oh, I actually don't think I've ever looked at Twitter stock. Yes, it is down 1%. That's a big price movement for a tech stock. Oh no, it's down 8.7% after hours. What happened? Twitter stock plunges on subscriber miss and low guidance. Subscriber? Speaking of which, I'm just kidding. Hey, Moon Platoon. Don't let this channel end up like Twitter. Twitter seems like it missed Q1 2021 earnings. Twitter stock was down as much as 10% in after hours trading on Thursday. That's today. Maybe later. Earnings 16 cents per share adjusted versus 14 cents forecast. Oh, so it okay, well it beat then. So earnings beat, revenue beat, monetizable daily active users 199. Okay, small miss. Basically the same miss, margin of error. Company reported revenue of $1 billion for the quarter. Oh wait, sorry guys, you guys can't see most of that article here. Twitter guided that it was expecting revenue between 980 million and 1.08 billion on the second quarter. Because it missed on user growth expectations, providing lower revenue guidance for the second quarter than expected. Lower revenue? Huh? Okay. So Twitter's in a bad way. Nathan Scott is finally getting to the end of the interview. He says, thank you for doing this. Well, thank you. When eventually you'll see this message, if you keep watching, you'll be able to see me thanking you. Most stocks drop because of missed guidance. Ooh, yes. 10% down though, jeez. ETX is down 8.5% after hours. How is the crypto world doing? Where's Bitcoin at? 52? Maybe I still have a chance to buy it. Yes, I bought I think $100 worth of Bitcoin on Webull just to see what it's like. But almost all my Bitcoin is in BlockFi. Guys haven't gotten your BlockFi links yet. $250 of free Bitcoin. That's the way to go. Okay, Microvision. Whoa, now. Oh, Harry, what are you cooking? Let me know. Velociraptor Finance. Where's the link for BlockFi? It's in the description. So here, I will give it to you. Ashley Kitschy. There it is. RC Card says, I'm making lobster bisque. You're making lobster bisque? Wow, fancy. Okay, Microvision. Let's see what kind of sound do they have right now. Yes, it's music. Classically music. Amazon is up $135 after hours. That's what I like to hear. You like Amazon?
No.
Yeah.
No.
No.
Every
Almost 4% up on Amazon after hours. That's money in the bank. Money in the bank. Milk tea.
Oji-chan. Get yourself. Oh, let me write that down too.
Lobster was on sale. Harry says making tacos and fries. Heck yeah, that sounds tasty. Hey Johnny's making a Pop-Tart. Ooh. GME big buy right now. Anyone else see that crazy dump candle on SPY in after hours? It jumped right after. Ooh. Which broker? Sourness. There's a pivot point here on Tesla where there could be some pretty interesting plays. I just bought some at the beginning of this stream. If you guys are not sure what we're waiting for, 7 minutes more until we see that Microvision earnings call. That's what we're waiting for. Oh, thank you. Trey is the man, great energy. Recta Knight is invoking the gorillas in the chat right now. James is eating top ramen. If you wanted to up your ramen game, I would recommend Nissan Rao. That is the ramen. So good. RAOH. Nissan. Listen, Nissan. If you are looking for a sponsor, if you're looking for a sponsor, I'm your guy. Based on my takeaway from the Trimbath conversation, is GME still going to moon? I don't think it changes much about the GME. It's just that pervasively FTDs are everywhere in our global markets. But where GME is a unique opportunity once in a lifetime to be able to try and make some really big bucks, a big transfer of money. Oh, Ashley's coming around on Trey. That's interesting. Not knowing enough and would like to change her opinion. Very nice. The artsy cart says, I like to add fermented ginger, lemongrass, and garlic paste to my ramen. I don't know why that was blocked by YouTube.
Is it because they said
fermented? Is fermented not a good word?
mee goreng is where it's at.
Mee goreng is where it's at too, but it's not quite the same as ramen.
It's not like a ramen, it's
a fried noodle.
Fried noodles. I'm out of college, so I don't eat ramen anymore. Oh, like there's like a nice ramen you can get at like restaurants.
Mm-hmm.
But like instant ramen, just for quick meals, yo. Steep tea into your ramen?
Tea in ramen. That sounds tasty.
Pho is nice too.
Oh man. King says, I love fermenting brews and meads and cider. See, that didn't get caught. So it's not fermenting. I wonder what word it was.
Is it garlic?
Is it garlic? Yeah.
Is it paste?
YouTube does not like garlic. Alright, me and my 5 shares of microvision are going to the moon in about 3 minutes.
What? Forbidden? Forbidden?
In the Bay Area, I'm not sure if most of you know this. I didn't. But the Bay Area, ramen costs like $15 here. And it's quite delicious. Thoughts on Bruce bashing AMC? I don't have any. I don't see how the situation for AMC has changed. If I wasn't bullish on AMC, I wouldn't have bought some today, because I like the stock.
My favorite pho is meatball pho.
Meatball pho?
Veggies.
Miguel Lopez says, I'm from Chicago, so I feel like I can say this. You're cool, calm, and collected, so I'm not sure if it's a Chicago thing. Or maybe you are certain about the squeeze, but you'll never disclose. I don't think it's a Chicagoan thing. I think I'm just a me kind of thing. Neo Guri for date night, says James. Oh, some chapaghetti. Hear that San Fran is full of human poop now. Maybe.
On the low key.
Yeah.
Because, like, I mean, it's a result of the homelessness. You need to take care of fellow neighbors.
Yeah.
They're not getting the help they need.
They really do.
Bad facts.
Okay, let's hear if the sound is still music, probably. 2 more minutes, guys, until the earnings call. Yes, delightful classical music. Meatball, you excited for the Microvision earnings call?
I think he likes it when we talk about food.
Yeah. Meatball, what kind of food do you like?
After he is named after food.
He's named after food, yeah.
So what's his favorite topic?
Medium D Speak says, if you like ramen, buy Sapporo Ichiban Ramen. It's the best. 89 cents. If you add green onion and pork and boiled egg, it's that $15 thing for like $7. Ooh.
And when you add like, yeah, garlic powder or straight or like real garlic.
This is a great conversation. Yes. Sapporo Ichiban Ramen changed his life.
Controversial.
He's gonna make some right now.
I like Cinemark popcorn better than AMC popcorn.
Bibimbap or chapchai. Now we're just getting a little bit off topic. But I do love bibimbap. So good. Alright, we got some classical music. It's 5 p.m. Eastern, Microvision. Ramen and hot pot soup. Ooh. Bring it to a hot pot restaurant. Just put your own ramen in the soup.
Bring your own egg.
Bring your own egg.
Oh, YouTube is a vampire confirmed. Well, no, because I think it was the ginger.
Ginger? Oh, maybe ginger.
Well, what if I typed it?
Do you pronounce it ramen or ramen? Oscar Perez, what's going on? Thanks for joining as an officer of the Moon Platoon. This is why we do these after-hour chats. Thanks so much for joining. Are they seriously waiting until this song is over? They're like, we would start on time, but the song isn't over yet. Atobitt. Food Wars. Ooh. God himself says, is that legit your mom? No, I'm about to go see my mom, though, in San Diego. Mardanis. Aw, say wonderful apes and moon platooners. Medium D says, when the squeeze happens and we all meet up in our Teslas, he'll give his Model 3 to his little sister who just turned 16 and bought a Model X. He's gonna treat you with some real Cuban food. Okay, that's a deal. That is a deal. Sukiyaki. Ooh. This song is banging. That's my jam. Let it flow.
Oh, VidCon? Oh my God, VidCon.
You think I qualify for VidCon now?
Oh God. Well, I don't know.
I don't have my silver play button. So we finally hit 80,000 subscribers today, which means it'll likely be another month until we hit 90,000. So if we can keep up this pace, we'll be able to get to 100,000 by my anniversary on Father's Day. So that's what I'm really hoping. And then I might qualify for VidCon.
Get to 100, I'll show my face.
Oh no. Ashley says, what do I think about Ride? Lordstown Motors. Microvision, you are 3 minutes late. This is embarrassing to your stakeholders, including me. I hold 5 of your stakes. Okay, the last 4 out of 4 buy signals on the 19th. And that would have brought you from 912 all the way to no clear sell signal, but all the way potentially to 1023. So that's a 10% rip. And then we just saw another weak 2 for 4 buy signal earlier today, but no price movement upward. So I've covered Ride, ticker symbol Ride before, and every time it kind of is like, iffy. And so this time is pretty much the same. If you're trying to find a 4 for 4, you're likely only going to be able to see a 10% rip. If you're looking for a long term, let's look at the daily range. So on the daily chart, there is actually a 3 for 4 buy signal, just without the buy here, on the 26th of April. So that was back when the price was around $9-ish. Yeah. Just know that it is currently oversold on the daily. So on the macro, there might be a clearer buy signal in the future. Oh, here we go.
First quarter 2021 financial and operating results conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your telephone keypad. To withdraw your question, please press star, then 2. You may submit online questions at any time today using the window on the webcast. Please note this event is being recorded. I would now like to turn the conference over to Lindsay Stiver. Please go ahead.
Thank you. Good afternoon and welcome everyone to Microvision's first quarter 2021 financial and operating results conference call. Joining me on today's call are Susanne Trimbath, Chief Executive Officer, and Steve Holt, Chief Financial Officer. The information in today's conference call includes forward-looking statements, including statements regarding exploration of strategic alternatives, sale of our product verticals or technology, sale or merger of the company, or completing any such strategic transaction, maximizing shareholder value, managing costs, potential customer orders, future royalties,
Excuse me.
Thank you. Good afternoon. Managing costs, potential customer orders, future royalties, progress under and benefits of existing contracts and license agreements, and the negotiation of future agreements, customer product launches, advantages of our technology, litigation, business execution, projections of future operations and financial results, availability of funds, product development applications and benefits, availability and supply of products and key components, commercialization of our technology, future product roadmaps, potential product sales, potential impact of products in the market, ongoing development of technology, scalability of technology and designs, expected performance of products, comparisons with competing products or technology, market opportunities and future demand, as well as statements containing words like opportunity, potential, possibly, intend, believe, goals, paths, expects, plans, will, could, would, likely, and other similar expressions. These statements are not guarantees of future performance. Actual results could differ materially from the future results implied or expressed in the forward-looking statements. We encourage you to review our various SEC filings, including our annual report on Form 10-K filed on March 15, 2021, as well as various other SEC filings made from time to time in which we discuss risk factors associated with investing in MicroVision. These risk factors could cause results to differ materially from those implied or expressed in our forward-looking statements. All forward-looking statements are made as of the date of this call, and except as required by law, we undertake no obligation to update this information. The financial numbers presented on the call today are included in our press release and in the 8-K filed today. Both are available from the Investor Relations section of our website. This conference call will also be available for audio replay in the Investor Relations section of MicroVision's website at www.microvision.com.
Oh.
And now I'd like to turn the call over to Sumit Sharma. Sumit?
There's a surprise of 1 cent. They actually missed.
Good afternoon, everyone. The last 14 months have been incredibly busy and productive at MicroVision. And today, I will cover some of the important achievements from our automotive LiDAR product development and their potential impacts, our target areas of execution going forward that we believe will increase shareholder value, and provide a business update. First, I want to thank our employees for their continued dedication and execution. Multiple times in our company's history, our team has performed exceptionally and delivered products based on our technology that we believe were far ahead of global competitors. Our employees are incredibly smart and talented, and I'm continuously humbled by their dedication to make MicroVision a success. Let me start us off today by updating you on our first generation long-range LiDAR A-sample and the potential impact it could have. I believe this sensor could offer a much higher level of performance compared to any LiDAR currently available or announced in the market. Our team successfully completed our A-sample hardware and development platform on schedule. Our A-sample hardware, as seen in the pictures shared in the press release earlier this week, is targeted for potential customers, partners, and parties interested in a strategic transaction and can be mounted on top or behind the windshield inside a test vehicle. We designed this hardware to support automotive level moving platform testing from the ground up. Our robust design also allows us to target this hardware for initial sales in second half of 2021, following completion of internal and external testing. I will elaborate on this a bit later on this call. We expect our sensor to meet or exceed current target OEM specifications. MicroVision's LiDAR sensor is expected to perform to 250 meters of range. It is also expected to have an output resolution of 10.8 million points per second from a single return at 30 Hertz. LiDAR companies communicate product resolution in different ways, as you may know. I think looking at points per second is the most relevant metric to compare resolution performance of competing LiDAR sensors. We believe our sensor will have the highest point cloud density for a single channel sensor on the market. Our sensor has also been designed for immunity to interference from sunlight and other LiDAR sensors using a proprietary scan locking intellectual property. Our sensor will also output axial, lateral, and vertical components of velocity of moving objects in the field of view at 30 Hertz. I believe this is a groundbreaking feature that no other LiDAR on the market, ranging from time of flight or frequency modulated continuous wave sensors, are currently expected to meet. Let me elaborate a bit more about the potential importance of this feature.
Please do.
The capability of future active safety and autonomous driving solutions to predict the path of all moving objects relative to the ego vehicle at 30 Hertz is one of the most important LiDAR features. This is significant as these active safety systems are tasked with determining and planning for the optimum path to safety. Providing a low latency, high resolution point cloud at range is an important first step. However, having a detailed understanding of velocity of moving objects in real time enables fast and accurate path planning and maneuvering of vehicles. Sensors from our competitors using either mechanical or MEMS-based steering time-of-flight technology currently do not provide resolution or velocity approaching the levels of our first-generation sensor. Additionally, flash-based time-of-flight technology has not demonstrated immunity to interference from other LiDAR, which is a big issue. This potentially limits the effectiveness of these sensors to be considered as a candidate for optimal LiDAR sensor or as a primary sensor to be considered for active safety and autonomous driving solutions required for 2024-25 OEM targets. LiDAR sensors based on frequency modulated continuous wave technology only provide the axial component of velocity by using Doppler effect and have low resolution due to the length of period the laser must remain active while scanning. The lateral and vertical components of velocity missing, lower accuracy of the velocity data would make predicting the future position of moving objects difficult and create a high level of uncertainty. The core function of active safety hardware and software is to accurately predict what will happen and adjust in advance of a dangerous event. These missing velocity components could potentially mean a larger error in estimating velocity compared to actual velocity of objects and predicting incorrect positioning. Let me share an example. An ego vehicle moving at 60 miles per hour and a target vehicle moving at 25 miles an hour relative to the ego vehicle covers approximately 11 meters in a single second.
Is this math?
Our sensor updates position and velocity 30 times per second, which would enable better predictions at a higher statistical confidence compared to other sensor technologies. If the target vehicle suddenly starts changing its position relative to the ego vehicle, an active safety system would do a much better job if it had more precise position and velocity data of the target vehicle. This could mean the difference between active emergency braking stopping short of an accident versus a potential collision. A sensor that can provide an accurate, detailed picture of position, resolution, and velocity of all objects relative to the ego vehicle at a faster frame rate would enable better active safety systems. Delivering safe mobility at the speed of light requires a sensor that is fast in data output, has high resolution so it can classify objects, has appropriate cost for large volume scaling, and provides precise velocity and range of objects to predict what will happen in driving conditions all of us experience day to day. When evaluating LiDAR specifications from various sources, it is important to consider the context of actual risks in the driving experience all of us have. I would also like to provide a fuller picture of what our product roadmap could look like and why it is important for our value. We expect MicroVision's long-range LiDAR sensor will have 2 versions in the future. Our first generation sensor is the first product in this roadmap. A future generation sensor would be a more advanced version that could have the same hardware layout as our first generation sensor. A future sensor could also include our proprietary software that would provide features needed for a standalone sensor used for active safety applications. I want to expand a bit on the importance of this future product and the value this could present for our shareholders. Having what I believe to be the best-in-class first-generation sensor gives us a huge step up against competition. It also provides our very capable team with a hardware platform to further increase value for potential partners and our shareholders.
MicroVision is
in the short term,
underneath its VWAP
I expect
now.
our team to continue focusing on internal and external validation of our first-generation LiDAR sensor and any potential confidential evaluation from customers or partners. In the long term, I believe a future sensor could provide features like active emergency braking, active emergency steering, pedestrian active emergency braking, and active lane keep, among a longer list of higher-level ADAS features with MicroVision software running on our edge computing. I believe a LiDAR sensor with embedded software that does not require massive amounts of external computing will ultimately reduce costs of the system for OEM, thus potentially accelerating adoption of vehicles with autonomous driving and active safety systems. I expect key features in our first-generation sensor, like highest resolution, full velocity components, community sunlight, and other LiDAR, would allow an incredible opportunity for us to add significant value with our software for a greater sustainable strategic advantage. I believe future products built with our software, sensor performance, edge computing, and scalability would be valuable to OEM, Tier 1 automotive suppliers, companies that are focused on mobility as a service, and therefore of value to our shareholders. As we remain focused on exploring all potential opportunities to increase value of our company, a portion of our team will continue building towards this roadmap. I look forward to reporting on our progress. Another major advantage of our technology is its capability to demonstrate scalability. To demonstrate this, we successfully developed and installed our long-range LiDAR sensor pilot line in Redmond, Washington. This pilot line is sophisticated. It includes 6 custom active alignment stations that our team developed working with our automation partners to enable scalability and performance. Our team has launched multiple pilot lines in the past for our display, augmented reality, and interactive display products. I am very proud of our team's ability to apply their expertise and complete this pilot line on time, given the challenges with the global pandemic.
So I think the problem with this approach is that
Pilot line will allow us to validate design and manufacturing processes in-house in faster cycles.
He's talking about the strengths of the company, which he does need to, but he's not talking about the reason why they missed earnings, which is what people are probably most curious about, which is why we saw that the price action has actually dipped underneath the VWAP, but then came back when people realized that there's a snap to the true price of the volume here. So currently still holding around $17.
Initial sales inventory in second half of 2021 to a contract manufacturer. This future production line in Asia will eventually have the capacity to produce between 12 to 15,000 sensors per year, starting sometime in 2022. The purpose of the second line is to show the next level of scaling. The ultimate capacity of this production line can be adjusted to meet volumes as required prior to mass production in 2024-25 timeframe. We continue to work to mitigate risks to our plan due to COVID and other limitations. The key element to show scalability of our technology comes from being able to scale our highly reliable, cost-effective, solid-state beam steering system for automotive use. This month, we launched our 5th generation MEMS to a 200mm wafer size with our MEMS strap partner. This is, of course, not a new effort for us. We have launched our MEMS to scale in the past with a 3rd generation that was used in Sony product, and our 4th generation MEMS that was part of our April 2017 contract and are currently in production. Advancing our 5th generation MEMS to the fab is a big step for this program that will allow us to demonstrate to potential partners our capability to meet future price targets. I'm extremely proud of our team to achieve this key objective with all the challenges faced through 2020. I would be remiss if I did not mention that our long-range LiDAR sensor is designed and developed internally from our proprietary MEMS-based laser beam scanning technology. This intellectual property has been developed and proven in various programs over more than 2 decades. Our differentiated sensor is built on a large body of intellectual property, including more than 400 patents. I believe this provides us with a competitive moat in hardware and software for years to come, and a very important sustainable strategic advantage. I would now like to briefly update you on our exploration of strategic alternatives. I believe our technology and products are at an inflection point in multiple verticals. I want to emphasize that the company remains committed to exploring all strategic alternatives to maximize shareholder value. In October 2020, we set the objective to complete our LiDAR product and said having hardware that can be productized would be an important step for evaluation by potential interested parties. We completed that objective in April as planned and are prepared to support any potential evaluation of our technology and capability to scale. As I shared earlier today, I believe our sensor technology is differentiated by features that will potentially be recognized as disruptive in the market. I've shared with you that I believe consolidation in this space will continue, and the signs of this are starting to become public. I believe MicroVision needs to continuously build value with our products, roadmaps, and partnerships, while also exploring strategic alternatives. Given the continued consolidation in the market, I believe this is a pragmatic approach as we seek to maximize shareholder value. I want to emphasize, our primary focus will remain continued validation of our 1st generation LiDAR sensor and support any customized evaluation data for potential partners. Finally, we ended the first quarter with $75.3 million of cash and cash equivalents. As Steve will share, our cash requirements and plan for growth are under control, providing a sustainable runway. This allows us to explore all our options from a much stronger position to maximize shareholder value.
I wish he was a little bit more articulate, because the CEO seems like a very smart guy. He just isn't really bringing the enthusiasm that we need. Dustin Bunker, I don't do price points because that's going to be a divisive point for a lot of different apes, but I have talked about the options chain leading up to 4 figures. And if people are excited about 4 figures for GME, that's what I'm excited about as well, as a natural price for GameStop to stop at.
Profoundly optimistic in our path. Now let me turn over the call to Steve to discuss first quarter results. Steve?
Thank you, Sumit. Good afternoon, everyone. For the first quarter, revenue was $479,000, a 21% increase over last quarter's revenue of $395,000. All of the first quarter's revenue was royalty revenue and attributable to our April 2017 customer. We're pleased to see an increase in royalties over the fourth quarter and look forward to our customers' continued success with the sale of their product. As I've pointed out before, royalties related to our April 2017 customer will be credited against the non-refundable prepayment the customer made in 2017. Once the prepayment is exhausted, the customer will begin making cash payments for royalties due. At the end of Q1, the balance of the prepayment stood at $7.3 million. The $7.3 million is on the balance sheet as a contract liability. Our first quarter cost of revenue included a $5,000 credit related to the reversal of a warranty accrual. The result is that the first quarter gross profit was $484,000. In comparison, gross profit was $395,000 in the prior quarter. Operating expenses were $6.7 million in the first quarter, up from $4 million in the prior quarter. In the first quarter, we put in place an employee incentive plan to retain and motivate our team. The expense recognition for this incentive plan increased our operating expenses by approximately $1.2 million in the first quarter. Total non-cash compensation for the quarter was $1.6 million. This expense is a non-cash item. Other causes for the increase were the company's portion of payroll taxes on employee stock option exercises and vesting RSU awards. There was also increased spending on labor and benefits due to an increase in headcount and an increase in materials and subcontractors for the development of our first generation LiDAR sensor. Our headcount at the end of March was 57, up from 47 at the end of December. For the first quarter, our net loss was $6.2 million, or 4 cents per share. This compares to a loss of $3.6 million, or 2 cents per share in the prior quarter. For the first quarter, cash used in operations was $4.5 million, which compares to cash used in the prior quarter of $4.2 million. Again, the non-cash compensation I referenced a minute ago was the primary factor for causing the cash usage to be so much lower than the operating expense. Cash and cash equivalents at the end of the first quarter were $75.3 million, up from $16.9 million at the end of the prior quarter. The increase was the result of proceeds from the 2 ATMs we completed in the first quarter, and we discussed those on our last earnings call. I'd like now to turn to the second quarter and give some thoughts on our spending and cash usage as we move forward through this year. I expect an increase in operating expenses in the second quarter. As I mentioned earlier, we initiated an incentive program that uses equity to retain and motivate team members. Those programs will continue through this year, and the expense recognized in Q2 will be similar to the $1.2 million recognized in Q1. I then expect the expense related to that program to decrease to about $1 million in Q3 and $800,000 in Q4. Additionally, in April, the company signed a 3-year employment contract with Sumit as CEO. The agreement eliminates any cash bonuses and instead primarily uses equity for CEO compensation. The agreement was designed to align CEO compensation with long-term shareholder interests. The agreement grants Sumit 1.2 million shares over 3 years and will likely generate non-cash compensation expense of approximately $7.5 million this year. About $5.3 million will be recognized in Q2, and then about $1.1 million in Q3 and $1.1 million in Q4. Again, this expense is a non-cash item. As for cash expenses, we expect we will continue to add headcount at the pace of around 10 to 12 people per quarter for the remainder of the year, primarily in our engineering organization, as we further advance the first generation long-range LiDAR sensor and prepare to start production. Additionally, we expect to backfill some of the support positions that were eliminated in our February 2020 headcount reduction. Taking those items into consideration, along with other spending, we see Q2 operating expenses in the $13 to $14 million range. Given that much of the increase is in non-cash compensation, we expect cash used in operations to be in the $5 million to $5.5 million range, about $500,000 to $1 million from the $4.5 million used in Q1. Additionally, you may have heard about tightness in the supply of silicon chips. To mitigate the risk of supply shortages, we have ordered inventory for some long lead time components that are expected to arrive in Q3. But if they should arrive before the end of Q2, we could see another $1 to $2 million of cash used in operations in Q2. As Susan said earlier, development is progressing well, and to ensure the supply of components needed to meet our plans, we concluded it was prudent to place orders for those long-term lead time components. Before we open up the call to questions, let me add my appreciation.
I actually can't stay for the questions, but I hope you guys at the very least liked that breakdown. I do have to run. I have a 2:30. I'm already 2 minutes late, but I appreciate that you guys had a chance to see this, right? I don't think that MVIS is going to continue this downtrend. I think it's already starting to recover back to this VWAP at 16. So if you wanted to buy in, I might myself, but I can't do it on stream. So hope you guys have a nice day. Thank you guys for joining this entire time. Thank you to those of you over on this page for being able to support the show. And I will see you bright and early tomorrow. Have a good day. And hey, between the two of us, you're my favorite. Peace. Oh, man. Okay.